The ultimate rainy day fund is whole life insurance done right. Hello and welcome to the Durham Talents channel. My name is Jesse Durham. In today's episode, we will be discussing the ultimate rainy day fund and how that leads us to the infinite banking concept as described and conceived in R. Nelson Nash's book, Becoming Your Own Banker. What we're talking about is properly structured whole life insurance with a mutual company that pays a dividend. Before we get to the end result, though, let's start with what purpose does a rainy day fund, an emergency fund, what purpose does it serve? What are we looking to do with this fund? How would we describe it? Let's just talk about this because for sure it is widely publicized in the financial realm, okay, and effectively done so by many folks whose material we'll even quote here today, even in conjunction with R. Nelson Nash's work. So what purpose does it serve? It seems that the emergency fund is for unforeseen emergencies, exigent circumstances, unanticipated events, okay? Something that happens that just was not accounted for. And, there are plenty of sayings out there like the enemy gets a vote or Murphy's Law. The idea that if something can go wrong, it will go wrong. And I would argue that that's not a great constant mentality to maintain in regards to having a limited mindset, pessimistic, but it's also very, 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 very reasonable. It is. We should be anticipating the unanticipated. That's my mentality, at least, is that we will be better off if we do anticipate the unanticipated, if we do prepare for anything and everything. We still may have to deal with emotional or psychological repercussions from an event, but it would be best if we didn't have to worry quite so much financially when a car tire blows out, the washing machine, the hot water heater, the just on and on and on. I mean, it's like we've all probably had experiences here and in regards to something similar, and if we haven't, for sure we will have. It's just the case that we can't account for everything that will happen, but we can be prepared for everything that will happen. So I would say that the purpose is to have money set aside for the unseen. And again, this is a legitimate step. And for example, Mr. Dave Ramsey's system, he encourages folks to set aside 3 to 6 months worth of living expenses. That way, if you do get laid off, if some family member has an unforeseen medical condition, just whatever, fill in that blank, that you are financially prepared to be able to weather whatever that storm may be. So systematically setting aside, for example, 3 to 6 months. And again, I'm not saying anything particular in that as far as 3 to 6 months. That's a great place. Maybe you want more, maybe you want less. I would encourage you to decide that for yourself. And yet I do think that it's good to have an emergency fund. I do think that it's great to have access to capital in the event that something happens, something transpires, and you would benefit from being able to access capital to be able to handle the financial aspects of that situation. Now, before we dive too deep on the subject of the emergency fund and how I arrive at properly structured whole life insurance with a mutual company that pays a dividend, and again, I am willing to look at other perspectives. In fact, I'll be making some quote references here. But when we do arrive at deciding to have and maintain an emergency fund, which I don't necessarily want to jump right over. Naturally, I think that the folks that are tuning in here to this information are learning and growing and expanding and looking to do big and better things. But I don't want us to jump right over it either, though, to pursue other things like investments or banking, because it is prudent. So I do want to be a proponent of preparation. Now, once we do decide that we want to have an emergency fund, and again, that could be for our household, that could be for our business. In the event of a business, it's commonly referred to as a war chest. And of course, there's history there, which is terribly neat that there was an actual chest that would be an abode for money, perhaps, tools, weapons, just different things that were necessary in that day and time. And yet again, we see that even in today's modern day, businesses, to be sure, can benefit during times of government shutdowns and pandemics and recessions, depressions, just all the ups and downs of life and economy and markets and such. Businesses also, big or small, can benefit from a war chest, from an emergency fund, from having access to capital somewhere to weather storms, or an investor. So regardless of who we are or what we are, when we arrive at the value of having an emergency fund and we decide to implement one or maintain one, I do believe that we should consider where, again, if we look at the war chest example, where was that put? Was that something that would just be laid out side of the portcullis and the moat out in the middle of a field where the enemy could just walk up and see it and take it? So we need to consider where this stuff is going to go once we are compiling this capital. So again, I dare say that war chest was put into some secret room in a secret place behind the gate, on the inside of the moat, on the inside of the portcullis, behind the parapets, in a castle. You see what I'm saying and describing here? So why would we not consider then, of course, with scrupulous detail, where we should have, and I know that folks have ideas about where money should go. And again, I'm not going to tell you where to put your money. I don't want to be told where to put my money, but I'll ask some good questions, I believe. I'll point to some good filters that we should use in considering where is it that we put this emergency fund in particular. Because sure, we could put an emergency fund under the mattress. And there are going to be pros or cons there. Does it satisfy a filter of being liquid? Yes, there's liquidity there. We can go under a mattress and pull the money out, the cash dollars out, for sure. Does it run risk of being burned? Yes. Does it run risk of being stolen? Yes. So it will have pros and cons. Do we put it in a coffee jar? Do we bury it out in the yard? Do we put it in a CD, a money market account? Do we put it in a checking or a savings account? So when looking at the options that are out there, let's talk about these filters. Let's talk about what characteristics would we like to see in the entity where we house our emergency fund. Well, I've already mentioned one, and that would be liquidity. We would want to be able to readily access. Now, some here say, well, you want to have very, very quick access, but not too quick. Meaning that these funds should be separate and segregated from our regular, run-of-the-mill funds, okay? But it's not exactly investing. It's not something that's tied up or illiquid at the moment. Again, would a piece of real estate or a structure add net worth? Potentially have tax benefits, and so sure, could we invest money in real estate and that be great? Sure, if you arrive at doing that for yourself, but it's not necessarily very liquid. And if you're dependent upon liquidating, meaning if you had to sell a home to be able to get access to that money, that may not be a very valuable situation for emergency funds. Even a cash flowing residence. Well, that's providing income, absolutely. But do we count just on that for emergency funds? I would think we wouldn't leverage the real estate by a HELOC, let's say a home equity line of credit. Well, that's going to be on the terms and conditions of someone else. So we arrive at other factors. Okay, terms, conditions, limits. Access. We arrive at the filter of access. Can I access this readily, and is it liquid? So liquidity, access. What about exclusion from market volatility? Again, there are many folks that would say that emergency fund money should not be tied to something that's going to be up and down outside of our control. And I as well would actually agree that I would indeed prefer guaranteed access, guaranteed liquidity, guaranteed protection from any kind of market volatility for money that I've systematically set aside for an emergency, for some exigent circumstance. Absolutely, I agree. How about control over those funds? Again, here I would insert that it would be better for the individual, the owner, to be the one in control of those funds. And I think that closely ties into being able to have growth as well. So being able to have control over those funds, but still warehouse it, still house it, still amass the capital somewhere where we can see some growth. Again, this is not an investment that we've made per se, actually at all. Let me be very clear. Emergency funds, in my opinion, should not be tied up in an asset, just like we were describing the real estate. Real estate may be a great investment if you believe that it's a great investment, and certainly it can be when done well, but that's not necessarily where we would want to have our emergency fund is tied up in sheetrock and lumber. So control over the capital, but also growth, because we do recognize that this money very well may have stretches of time, perhaps infinitely, depending on what you want, where it will be immobile. Okay, it will be accessible, it will be liquid, but we anticipate operating and investing outside of what we've put aside for emergency funds in particular. So even while it is immobile, we would prefer that it grow. So again, I'm a proponent of growth, and the only thing that could be better than growth would be guaranteed growth, perhaps. So I would actually be a proponent of guaranteed growth. Now, when we look at these filters, and we could look at others. I mean, we could look at, is there a way to have an emergency fund that is also hedged against inflation? Is there a way for us to have an emergency fund that is also protected against litigation? Because money in a checking account or a savings account very well may not be. And again, I'm not a lawyer. I'm not a legal expert, and yet I know that some assets are better than others about these considerations for our capital, even in the event that it is an emergency fund. So let me run some quotes by you, because again, I know that this idea of an emergency fund, while I agree that it's a great concept, that it should indeed be implemented if you deem that that is important for you, let's look at what is being said. Your emergency fund is not an investment. Your emergency fund is insurance. Here's another quote. An emergency fund is sort of like insurance. It costs you some money up front, but it covers you when things go bad. Now, those are quotes respectively from Mr. Dave Ramsey and Miss Rachel Cruz, his daughter. Now, these are some highly publicized quotes and sayings and references that are made with regularity to millions of folks. And I completely agree. I absolutely agree that our emergency fund should not be an investment, that it may cost us something up front, like Miss Cruz says, but it will for sure be there when things go awry, when they go bad. And when Mr. Ramsey said that our emergency fund is insurance. Now, that's a direct quote. Your emergency fund is insurance. Thank you, Dave Ramsey. And I'm not trying to be facetious here. I like Mr. Dave Ramsey. The man is hilarious. He does make me laugh. He is self-acclaimed hillbilly, and I'm from Western North Carolina myself, so I can readily attach and enjoy a lot of his humor and the fervor that he has, educated and helped and inspired lots of people to do lots of great things. I do believe in giving credit where credit is due. The man has done massive amounts of inspiring folks to better themselves, to better their family, and I love that. Now, where he and I would diverge when it comes to our notions and understanding on insurance in particular, I'd like to set aside for the moment. If you're a Dave Ramsey fan, you may not want to. I'm not trying to circumvent that. I'll come back to it. But again, if we evaluate the qualifications that Mr. Ramsey and Ms. Cruz would espouse and regularly do so, here's another quote. Put it in a good money market account. This is from Dave Ramsey. Put it in a good money market account with check writing privileges and a decent interest rate. That way your money will work for you a little bit. That's a direct quote from Dave Ramsey. What I'm asking is when we look at what he's saying, isn't he saying that it should be liquid and we should have access? That it should not be connected to volatility of any sort, and that it in fact would be nice if there were some growth, a little growth. I agree. Growth is better than no growth. That it is insurance against Murphy. And I'm not trying to use a play on words here. I am trying to use Mr. Dave Ramsey's words for his intended purpose as well. I know that he's not speaking of whole life insurance when describing the emergency fund. And yet I find it so very interesting that he, of his own will and volition, uses the word insurance. Words have meaning, and that word of insurance means an offsetting of risk. In the event of an emergency, we would be better positioned to have access to capital, money, to be able to handle that exigent circumstance that came at us unexpectedly, and to be able to do it with guarantees, control, no volatility, have it be liquid, us maintain access, there be growth. That does indeed sound like insurance. Well, it's because it is, and it can be. Now, can you follow word for word what is said there and put money in a money market account? Yes, and I'm not even saying don't do that. But what I do know is that you can't have money in a money market account and also do whatever else with it that you may need to do and still have all the benefits of paying premiums to a whole life insurance company, that mutual company that pays a dividend, wherein you can access your capital. And here's going to be a difference. When you access capital from the cash values of your whole life policy that's been properly structured with a mutual company that pays a dividend, that insurance company is not going to ask you what it's for. And all the terms and conditions, you have the private ownership of this policy. You have a guaranteed contractual right to access the capital in your policy. And it's perfectly collateralized in the death benefit. So there's nothing in the balance outside of a perfectly collateralized death benefit. So you can access the cash values. Again, and I like it that it's not too readily. I mean, we're talking about insurance companies. You would have to make a phone call to the company, or you would have to send one form in to be able to access your funds. So it's not as liquid as money under the mattress or money in a coffee can, and yet it satisfies all these characteristics that myself and seemingly that Dave Ramsey is espousing, just taking him for one example, that we would want in an emergency fund, a rainy day fund. the control, the access, the liquidity, the growth, the guarantees, the hedge against volatility completely. All of the filters, all of the characteristics are there in properly structured whole life insurance with a mutual company that pays a dividend. Life insurance described this way satisfies all the characteristics that I can think of, and more than I've even already mentioned, and all that I've been able to. And I've read the books, I've listened to the podcasts. Again, Mr. Dave Ramsey is an incredible man. Business owner, entrepreneur, philanthropist from everything that I gather. Great, wonderful Christian man. He's hilarious. He's hilarious. And no doubt he's impacted the lives of many, many people. So I would not disparage him in this way. Even though I would encourage us all to use imagination when considering the emergency fund. Let's use some imagination. Let's not compartmentalize too much to the excess that we overlook that whole life insurance described with all these characteristics fits the bill in what we're looking for in an emergency fund, is what I'm saying. So again, it would take an open mind to be able to see that whole life insurance perfectly satisfies the entity that we would describe to use best for an emergency fund. And logic and reason allow us to get there. So it does take imagination to consider using whole life policies and the cash values that they would inherently have, and the contractual right as the private owner of that policy to access that capital, that liquid capital with guarantees and the growth, that all these aspects and characteristics are present in a policy such as we've described. But it would take the imagination, but then also the reason and the logic to see that we can do it, that it works, that it fits the bill. Now, if you've stayed with me through everything that we've looked at in sharing some Dave Ramsey and Miss Rachel Cruz quotes, for example, and looking at the infinite banking concept and how it can be used to satisfy, our need for finance, a death benefit, everything that's in Nelson's book, but also the appropriate application of using a policy and its cash values as an emergency fund. If you've stayed with me through all this, because I know that there are seemingly conflicting views on such highly publicized items as whole life insurance and emergency funds and how we should go about doing it in the financial world. I know that exists. Another factor I would like us to consider is banks. So again, there are those that would say, go put your money in a checking account or a savings account, for example, a money market account, something along those lines. My question then is, let's take that bank, for example. Could you have money in a separate segregated savings account for an emergency fund? Absolutely. Or a checking account. That bank, where do they put their money? Where do banks put their money? And I know that they put them in many different places, but let me point out that in connection with whole life insurance, commercial banks are the largest purchasers of whole life insurance. So I find it interesting that we would be told to put emergency funds into a checking account or savings account or somewhere that a commercial bank can access those funds. And then for us to ask, well, where does that bank put money? Because if we're putting $1 in that bank, where's that bank going to put it or move it? And when I know that commercial banks are the largest purchasers of whole life insurance, well, I believe that adds another level of intrigue to this discussion on rainy day funds, emergency funds, and where to put them. So let me encourage again that you use your imagination, that you be open-minded enough to read a 92-page book that has large print and big illustrations throughout. 92-page book with an open mind and use your own logic and reason to evaluate where we could find the ultimate rainy day fund. What entity would best satisfy our need or want of an emergency fund? So I hope that this discussion has been helpful. If you would like to continue this discussion and find out more about how to implement the infinite banking concept into your house, your business, your investing, also including for the purposes of having an emergency fund, you can reach me at 828-817-4223, or you can email durhamtalents@gmail.com. This has been a great pleasure for me. I look forward to our next conversation. Have a great day. Take care. I wanted to say something right there, and I had so many thoughts coming at once that I lost that particular one. But that's okay.